Hello, and Paul from Henchurch Lane is back on the Mortgage and Protection podcast, this time to talk all about mortgages for a limited liability partnership. It's great to chat with you, Paul, as always. How are you?
I'm very well, thank you, Tessa. How are you doing today?
Oh, that's good to hear. I'm all good too. Thank you. And I'm so glad that I didn't slip up on that term. It's quite a long term, isn't it?
It is indeed, yeah. Although LLP is much shorter than limited liability partnership.
I
It's a bit
think
of a
so.
mouthful, yeah.
It is. So I think we will abbreviate throughout, apart from this first question. So let's get straight into the questions that we've got here
Okay.
then. So first of all, quite simply, what is a limited liability partnership, and can you get a mortgage if you are in a limited liability partnership?
Okay, so a limited liability partnership is quite a complicated structure. If you were to Google it, you would see, like I have done, obviously, to make sure I come back to you with a very specific definition here. But it's a structure that just allows a traditional partnership, like what's the most common one? So do you know when you watch something on Netflix, like a law firm where they go,
Oh, yes.
I've made partner, right? It's very similar to that sort of setup. So you get people like lawyers, architects, doctors, dental practices. It's like a professional outlet of business that include multiple people running that firm for the purpose of profits. Generally speaking, a lot of those groups of people would set themselves up in what's called a LLP. Um,
Really?
but it's just a tax wrapper, effectively similar to a limited company, but there's differences in how that construct is taxed. And can you get a mortgage? Yes, as long as you're earning money. Generally speaking, you can put that money towards affordability on top of your deposit, and you can obtain a mortgage. And actually, it seems to be relatively straightforward in comparison to limited companies, sole traders, and other ways in which you could be self-employed, because ultimately this is a self-employed construct.
Okay, well, a really clear introduction there. So that's great. You painted a good picture there. So hopefully
Thank
that's
you.
making sense. So the next two questions follow on. So they are, can a newly established LLP apply for a mortgage? And can I get a mortgage if I've only been in an LLP for a year? So new LLPs.
Yeah. Okay. So again, self-employment normally comes with this main question: how many years accounts do I need? Do I need 3 years worth of sole trader accounts, limited company accounts? And obviously, it comes through from an LLP perspective as well. But in all honesty, it's one of the rare ones where actually you could get a mortgage following the setup of an LLP last month, because generally speaking, you are in that professional realm. You will have been in the industry for a certain amount of time. You don't get people coming straight out of university and setting up LLPs. Generally, they're people that have been trading for a long
Mm.
time and they set up in a partnership. They will have been employed or even self-employed before that. And lenders can take the approach to assess their income based on the historic measure of that. So if you've been in an LLP for any amount of time, then don't let the fear of it not being long enough um, prevent you from getting the ball rolling with anything mortgage related. Have a chat with the broker, and they'll be able to explain to you clearly where you stand based on your circumstances.
Oh, well, hopefully that sounds reassuring to anybody listening to this, watching this. So that's good news there. Now, moving on then, people would like to know, what documentation will lenders want to see as an LLP? So any differences here?
Um, Not really. So you're always going to need your ID, your bank statements, your source of the deposit, proof of that. And generally, from a document perspective, you'll be viewed as very closely to a sole trader. So you'll get paid personal income from that LLP entity. And that's going to derive from things like salary, maybe bonuses, and profits. And that's all going to show on your SA 302s, which are also known as tax calculations. So they'll probably ask for 2 years worth of those, along with the corresponding tax year overview documents, which can all be obtained from the HMRC portal or from your accountant. And that's pretty much going to be, a good chunk of lenders. Some of them might go down a slightly different route depending on who you apply to. They might ask for an internal accountant's reference from the people that deal with the finances within the company, or they could ask for a little bit more around the setup of the actual partnership itself. But generally speaking, it's going to be treated quite similar to someone that's a sole trader.
Okay, there we go. So that's clear there as well. So thank you for that. So let's move on. So we've got 2 or 3 questions in one here. So I'll just read them out. So how is mortgage affordability worked out for an LLP? And is there a cap on how much you can borrow as an LLP and how much deposit is needed? So affordability, borrowing and deposit there.
Yeah. Okay. And to make it relatively straightforward, the answer to that is on a conventional basis, it's a similar state of affairs. You're going to need a 5% deposit. The income from the LLP portion of the application is going to show, like I mentioned earlier on the tax calculations, right? So some of the lenders will look at that and take the latest year. Others will average it out between the latest 2 years. And then you'll look to use that figure along with any other income from, let's say, from other applicants on the mortgage. For argument's sakes, it's going to go into the affordability calculator along with all of the commitments, along with all of your expenditure. And depending on what multiple is going to be applied to your case, will obviously depend on the maximum loan that's spat out by the lender. And that will obviously be determined by that particular lender, right? It doesn't mean because you're an LLP, you're going to get a different kind of multiple. It's more so based on what lender you approach, which is why it's important to make sure you factor all of this information in and you assess the circumstances from top to bottom and place the client with the best lender.
Okay, there we go. So different factors involved there.
There was a lot of questions in that one though, Tess. Did I miss anything in particular, right?
Did we cover deposit?
Deposit's 5% minimum.
Was it 5%?
Cap
Borrowing?
on how much you can borrow. That's going to be standard based on the lender rather than the fact that
Affordability?
it's an LLP. Yeah,
I think we have.
affordability is all in there. I've covered it all.
There we go. Look at that. Brilliant. So shall we have a look what the next questions are? So,
Sure.
okay. What happens if I have bad credit as an LLP partner? Can an LLP with company debt apply for a mortgage?
So company debt isn't really an issue when an individual is applying for a mortgage. Most companies are going to have some sort of company debt, and hopefully that's being managed appropriately. That's within reason. If it's being managed terribly, there's a likely chance that it would sort of filter through to a personal situation anyway. So your personal debts and the conduct of those agreements are really going to have a direct impact on your mortgage application, right? So depending on how impaired your credit is, will really depend on the rate situation. So how can we secure the best rate for you? It's really going to depend on you having as good a credit as you can possibly have. It's rare where we can't secure anything at all based on someone's poor credit. It would normally just mean that they have to take a bit of a hit on the rate in comparison to the high street rates that you see out there.
Okay. Well, hopefully that sounds reassuring there. It's something to bear in mind, but yeah, not all bad there, is it? Hopefully.
No. And the washing machine's just started doing a
has it?
spin in the room next to me. Could you hear that bit at all?
I couldn't. I don't know whether our viewers, listeners can, but there we go.
Okay, we'll have to
Perfect.
see on the recording. Okay.
We'll see how that turns out. Okay, so moving on then, another question here asks, can I get a buy-to-let mortgage as an LLP? Any differences?
Yes, okay. So the reason that people tend to ask questions around buy-to-let or around most mortgage queries generally tends to be about their income, right? Now,
yes.
with buy-to-lets, predominantly the affordability and the criteria is going to be based on the property and the rental yield or the rental potential of that property. So your income situation isn't as important as it would be when you're buying your own property. So I would say if you're looking to invest in property or becoming a buy-to-let landlord, then and you're in an LLP situation, don't be too concerned about that. Again, have a chat, and there's likely to be some good options available to you.
Oh, so good news there. Again, that's good news. Now, how does
this is
remortgaging...
very positive, this podcast, isn't it?
This is very positive. It's going great. And we've only got a few questions left, 2 or 3 questions left.
I think I want to be an LLP now.
There we go. Okay. Right, let's move on then. How does remortgaging work then? Any differences if you are an LLP or in an LLP?
So
try and get the grammar right there.
We've said it too many times now.
We have.
I think I might move to limited liability partnership. That's easier. Any differences when remortgaging your current deal are only going to become as a result of being in a different situation than you were. So let's say you were employed, now you're an LLP. That's going to seem different because obviously you're going to be looking to provide completely different evidence documents and things like that.
Mm.
But in isolation, the remortgaging process itself won't be much different from a purchase application from a remortgage application. So that's a really straightforward question.
So again, positive there, positive. So in summary, then we've got a question here that asks, what else can influence my eligibility to obtain a mortgage as an LLP?
Okay, so this is going to be the same answer in the most part for everyone. You know, for anyone who's on LLP, limited company, sole trader, employed contractor, whatever you are, the biggest factors in helping you obtain, or the eligibility of obtaining a mortgage, will be your credit, your conduct, and your affordability, and your deposit. So those four things, you know, keeping up to date with all of your credit agreements and making sure that your credit score is as good as it can be, making sure that the affordability matches the loan amount that you're looking for, and making sure that you've got a deposit to some sort, the bigger the better. Those are the four things that have the biggest impact. If you come to me with any other quirks, as long as those four things are intact, generally speaking, the construct of employment that you're in is going to be something that we can work with. And, you know, if you're in a big partnership, there's going to be very little you can do to influence the sort of choices and the decisions that big entity is making anyway. So you just do what you do there and make sure that your personal situation is in as best a position as possible. That's what I would say.
Okay, so some key pointers there to take away from the episode. And of course, we've got to ask, as we do on every episode, you have demonstrated this already, but how can a mortgage broker help out here? Anything else you'd like to add? Any final thoughts?
Okay, so what I'd like to add here is that, because I think we touched on this just before we started recording, LLPs in general are, for the most part, would come across quite confusing as a tax situation for a lot of people. If you ask someone, how does an LLP work, or what are the benefits of an LLP versus a director of a limited company versus a sole trader, it'd be quite a complicated question to answer. But generally speaking, the mortgage situation isn't any more complicated as long as you know what you're doing. So what I would say is, the reason that those questions are there is because people from LLP backgrounds are wondering whether or not they need a year's worth of accounts, are wondering how bad credit affects them. You know, they're not just asking, does bad credit affect mortgages? They're asking, does an LLP having bad credit affect a mortgage? So speaking to a broker is just going to answer all those questions straight away and put you in the best position to achieve your goals as soon as you can, rather than trying to find it on Google. But yeah, speaking sooner rather than later is always the best route here. Okay,
there we go. Well, thank you for that, Paul. As always, hopefully we have helped some people out who are listening to this, watching this.
So.
Definitely. Great breakdown there for each question. So there we go. And I'm sure we'll speak to you again soon.
Look forward to it. Thank you, Tessa.
Bye.